Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on technical picture on euro currency. Speaking two words about new report that we have released, I think that it might be very important. As usual, we have considered the recent data, have found some interesting moments. If you start digging this data a bit deeper than you can see just in the news stream, and so you can find a lot of important things that discovers some really important background there. So as usual, we do this in our reports, and we did it again. So, but at the same time, we have paid attention to some moments, news that have been released in recent week, but it was not clearly signed and stands in shadow of the payrolls report, of the Bank of England decision, in particular speaking the recent speech of the Mr. Besant concerning national debt, some other issues. It is discovered some, probably, as we suppose, some plan, strategical plan on the Donald Trump team, in the perspective, in relation to the national debt in particular, which makes really a direct relation to the long-term tendency on euro currency. And things that we have seen this week makes us think that the journey with the bearish trend that we are following on euro currency for about 2 years is coming to some final point. So it doesn't mean that we do not expect anymore that euro should reach the parity. We still think this, but we think that it might be and probably will be the final destination point. So around 90, even below the parity, and around the parity, we suggest that it might follow the sharp reversal just by the changing of the global economic strategy of the United States. If previously the United States were oriented on the global domination, currently they are focusing on its own affairs inside the country, trying to bring the prosperity, first of all, to their own citizens, and just standing focus on the domestic things, which is decreasing the amount of the dollars that will be necessary for foreign trading with the United States. That particularly could lead to the changing of the trend in the euro. Second reason is big shifts in the domestic politics, as in the European Union, as in the United States. As you know, it's not a secret that Donald Trump actually supports national-oriented parties in Europe. This is the Viktor Orban in Hungary, this is Fico in Slovakia, and as you know, the AfD in Germany is also is the party that has become actually some favorite horse for United States. This also could change the economy strategy inside the European Union as well. All the stuff together makes us think strategically that in the perspective of the 6-8 months, the bearish trend on the euro currency could start fading. So, but we think that it will happen not earlier than euro will complete the major targets around the parity. So, if you read the report, you will get much more details and some other very interesting stuff. Now, if we start speaking about the short-term perspective, this is really a very tricky situation here. Despite that market mostly remains in the same area, we've got a lot of statistics last week, but we don't have any big changes. There are some tricky moments exist. And I will show you what these particular tricks are. So first of all, if you remember on the weekly chart, we talked a lot about the possible double repo by pattern. But take a look what has happened on Friday. Once in the beginning of the week, euro was standing below the 3x3, and it was seemed that market will close below the 3x3, getting a second close. Right on Friday, we haven't got it. So you could see that we have close below 3x3, close above, and we should get the close below or somewhere around informing the lows around the previous one. While we've got the lows on a gap opening on Monday, we haven't got the close below 3x3. It means that market, we should spend 1, maybe 2 more even weeks to get a second close and then we need to close above it once again to get pattern confirmed. That's what about the EUR. What the risk factors are. First of all, take a look that we have the grabber, and the same grabber we have on the dollar index. They particularly suggest that market should test these lows and retest them. And that in general stands in favor of the close below the 3x3, right? So here we don't have any contradiction. But if you take a look at the dollar index on the daily chart, you still have these two grabbers valid. That's suggesting the taking out of these lows. It means of the weakness in the dollar and correspondingly the strength in the euro, suggesting that euro currency might not keep moving to the downside, right, here, but instead reverse up and should take it out of this top if we take analogy with the between the dollar index and the euro currency. And that is major tricky moment here. In what direction we should trade currently and what particular we have to expect. Based on the payrolls report, I would call it more as a bearish performance because payrolls were relatively weak. That should support euro making pressure on the Fed with the weaker job market, suggesting the cutting of the rate. So taking this logic chain, so that should be supportive. But instead of that, we have the collapse and strength of the dollar. I suspect the reason for that is wage inflation data that shows that hourly earnings have increased and showing inflation around 4.1%. This is very high. And that was the dominant factor inside of the payrolls report on Friday. It leads to the collapse here. So taking in consideration this bearish performance and suggesting of the taking out of these lows, right? Trend on all time frames right now stands bearish. I suppose that we should start from the bearish background, which is actually will be very easy to control because for things that we just have discussed, the 104.45 area, this top, will be vital. So if we are correct, market should start downward action immediately with downward continuation and keep this top intact. If by some reason we will see the jump above it, it means that this bearish context is not valid. Market probably is tending right to the 106 conference resistance right there, which also means that on the weekly chart we will get a kind of the double repo lookalike pattern. What the difference? The lookalike patterns, they mostly work in the same manner as a normal pattern, but they have some flaws in the shape. So for instance, we could get the bottom here and close, second close above the 3x3 in the same moment. When this sometimes happens, when the reversal on the bottom will be coming very fast. So market usually forming first to close below the 3x3, on next week it reversed up and close above. That gives us confirmation of the pattern. But sometimes when reversal stands very fast, it could happen at once. So market forms the bottom, reverse and close above. But at this moment, we're not sure yet. We do not know this with definitely. But if we will see that market taken out of this top and start moving higher, returning back to the 106, it will tell us that probably we're getting double repo lookalike pattern. You could see it very often with the bread and butter trade. For instance, where to show you the example. For instance, something of this kind. This is not, of course, enough sufficient for us, but here we are most interesting with the performance around the 3x3. So, for instance, you can see that we haven't got the close below the 3x3, but market already completed the target 618 retracement. So sometimes that you could see it on the bread and butter trades as well. So the reason for that, as for the bread and butter trade, as for the double repo, is a fast reversal at the bottom. So, and depending on what will happen here on intraday charts and around 104.45, will clarify for us whether we have the bearish context, the market still aiming on the retesting of the lows, or we have the bullish context and market actually moving higher first to 106 and later for a deeper retracement to the upside. And so in some way, in some meaning, the coming week will be decisive for the direction of next direction for a few weeks probably. So that's what on daily. On the lower time frames, it will be relatively easy to control. It sounds a bit sophisticated, but in fact, it's nothing really difficult around it. So first, we're starting from the 4-hour time frame chart. Here you could see we have got this triple to buy. It suggests some technical bounce. If you want, you could trade even this minute setup, but it's really a big chance that you could miss it on Monday open, so its target might be reached very fast. Anyway, here we will be watching for a bounce based on the current Gartner's triple to buy and right from the 103 FIB support area. On the hourly chart, we have resistance levels. This is minimum target of this Gartner's triple through 103.60. And in fact, these two levels will be most important to us. We could consider taking short position only until market stands below 103.90 FIB level, or let's call it 104. Give some handicap here. So until market stands below 104, theoretically we could consider taking the short. But once market will start breaking the 104.10, taking out of the stop, that will be the clear sign that the bearish setup probably will fail. So the market is turning on the bullish side and start moving higher. So that's what we will do around this area. On the opposite side, if we will be right and indeed market will start bearish action after some retracement, turning down, start collapsing. So here as we could see for the C point lows, once they will be taken out, that will confirm that we are on the right way, because upside ABCD will be vanished totally. And also you could use some different markets to control it. For example, on the 4-hour Great British Pound, since we have here some uncompleted reverse hand shoulder shape, once market will drop below 123.80, 24 area, it also will confirm the bearish scenario. It will trigger the hand shoulders failure, which means the drop below the head, which is the right arm of the big pattern, and potentially back down to the lows that we have on the Great British Pound as well. So if you're comfortable with the euro, you could control it through the euro currency chart. If you like more the picture on the Great British Pound, you could control the scenario with this chart on the cable. Mostly they will be working together, so use the picture that you like more. That's actually what we will start with, and then we will see what to do, depending on what results we will be. Right now, we could say that if we were on Tuesday, for example, we'll see market somewhere around this level, 104.25, 104 coming to the 104.40, that will be the bullish sign. And probably it means that the double repo starts working. We're getting double repo lookalike with a possible upside potential. If we will get market somewhere below these lows, it means that bearish scenario is still working, and market is aiming on the retesting of the lows on the daily chart. That in two words what we have on the technical side.